and participants from around the globe. We welcome you to our webinar of today on climate risk and regulatory landscape in India, understanding compliance requirements for businesses, organized by the Sustainability Reporting Standard Board. I am the Secretary to Sustainability Reporting Standard Board, would like to welcome all of you. Thank you for joining us today. Now we would like request CA Pallavi Jain ji from Prayagraj branch of ICI to welcome our Vice Chairman CA Dr. Anuj Goyal ji of SRSB. Over to you, Pallavi ma'am.
Thank you, ma'am. A very good afternoon to all the participants present. It's an honor to introduce CA Dr. Anuj Goyal, sir. Sir is a Central Council member of ICI and Vice Chairman of the Sustainability Reporting Standards Board. He also serves as the Chairman of the Ethical Standards Board, the Professional Skills Enrichment Committee, and the Publication and Series Directorate. He has also served as Chairman of the Ghaziabad chapter of the ICSI and the ICMA. With an extraordinary tenure of 17 years in the Central Council, 3 years in the Regional Council, and 6 years in the branch, including Chairman of the CIRC of various ICI Central Committees, member of the Editorial Board, and more, he has made significant contributions to the profession. With vast experience exceeding 30 years and a wealth of knowledge, his contributions in the field of research and development have always been remarkable. He is a well-known speaker on various topics and also serves as a visiting faculty member at various institutions. Additionally, he has worked as editor-in-chief and editor of various publications of professional interest. We welcome you, sir.
Thank you very much, CA Pallavi Jain ji, our very, very prominent chartered accountant who hails from Prayagraj, now at Bengaluru. And I am really very happy that we are having the presence of our very, very prominent resource person, ex-ICI, Jyoti ma'am. And Jyoti Singh ji is a very, very prominent chartered accountant and is an expert of various professional fields, including, of course, she's the expert of the SRSB and is contributing in a great way for the cause of the profession, for the cause of the members as a resource person also. And in business reporting and sustainability reporting, she is trying her level best to see that how we can really do something very, very quickly. We are having the presence of CA Dr. Dheeraj Sharma ji, very, very prominent educationist. He is running very, very prominent startup Devalia and has been the chairman of one of the largest branch of the North India, Gurugram branch, and is contributing in a great way in the field of the sustainability. We are having the presence of our event enablers, Pallavi Jain ji and Utkarsh Singhal ji from Prayagraj. And of course, we are having our very, very prominent chartered accountant, CA Puneet Mittal ji, CA Nitin Arora ji, and with us. And we are having, of course, Shweta Goyal ji, our Secretary, Sustainability Reporting Standard Board, CA Manish Goyal ji, Dr. Chindu Chandran ma'am, and Tejas Arora ji from the our team of the SRSB. And we are having thousands of delegates from each and every part of the country, outside country. Also, I welcome all of you on behalf of the Institute of Chartered Accountants of India and on behalf of the Sustainability Reporting Standard Board. We were a little bit late, so due to some technical glitches, so I'm really sorry for that delay. And friends, today Jyoti ji is going to take on climate risk and regulatory landscape in India, understanding compliance requirements for businesses. And we are having, of course, the chairperson, C. Sripriya ji, who is leading by example as far as this SRSB is concerned. And today we will explore why it is so important for businesses to understand climate risk and follow new regulations. And friends, as far as climate risk is concerned, this refers to the problems businesses might face because of climate change. There are two main types: physical risks like damage from severe weather and rising sea levels, and transition risks, which involve changes in regulations, market demands, and the shift to a low carbon economy. It's very crucial for businesses to be aware of these risks to stay resilient and competitive. In India, friends, there are several important regulations related to climate change. Following these regulations is not just about avoiding penalties, it's also about protecting your company's reputation and financial health. Businesses need to assess their climate risks and integrate sustainability into their operations. And it's very, very important for all of us to be accurate and transparent when reporting on these efforts. And we are having, of course, C. Jyoti Singh ji, who will be sharing her expert analysis and perspectives with us today. And we are having our event enablers, Pallavi Jain ji, Utkarsh Singhal ji, and of course, in closing, I will say in understanding and complying with climate risk regulation is very, very essential for your business's success and sustainability. I encourage all of you to take proactive steps to manage these risks, and I'm quite confident that participants will actively engage with our speaker throughout the session and leverage this opportunity to gain valuable insights into navigating the green economy. And I'm really very happy that all of us are together to make this earth a better place to live for our future generations to come. We are having expert, C. Dr. Dheeraj Sharma ji, who is contributing as a faculty also as far as the sustainability is concerned. And we will certainly be having few words from him. And before that, I will request our very, very prominent event enabler, CA Nitin Arora ji, to formally introduce CA Dr. Dheeraj Sharma ji, a very, very prominent educationist before all of us. Over to CA Nitin Arora ji.
Good afternoon, everybody. This is CA Nitin Arora. Happy to introduce CA Dr. Dheeraj Sharma, who is a very versatile personality and a humble gentleman, always ready to help towards the enhancement of our profession. He has a versatile experience and extensive qualification and a proven track record in internal controls, audit, implementing the sustainability compliance in various companies. He is a dedicated researcher also who is contributing through extensive research endeavors and a prolific presentation record at both national and international conferences. Apart from that, he is an accomplished communicator with strong analytical drafting and negotiation skills. And as Anuj sir has briefly explained, he has been the ex-chairman of one of the biggest branch, Gurugram branch, and he is also leading one of the startups, Devalya, which is contributing towards child education. Thank you.
Dheeraj sir, please.
Thank you. Thanks a lot, Nitin sir, for such a generous introduction, and my warm greetings to Vice Chairman of SRSB, CA Dr. Anuj Goyal sir, who offered me this opportunity to share few words in this webinar. Though I joined, I came here today to attend some other meetings, but when I saw that this webinar is going on this particular topic, so it's really very interesting subject to me. And I heard that CA Jyoti Singh ma'am from she is ex-ICI member. In fact, we feel that she is right now also part of ICI. So I just joined this program with instructions of Anu sir. Thank you, sir. And we have with us Shri Shweta Goyal ji, Secretary of SRSB, and all other team members, our speaker and webinar enablers from Prayagraj. Few things which I would like to throw some light on those things. The first thing we usually listen about, that the glaciers are melting. Another thing that comes in our mind, that is all about floods in the various parts of our country, not only in India, but globally as well. We hear about some floods in China, in other countries as well. Besides these, there is I can say one idiom that Bombay is sinking by few centimeters every year. I do remember from my childhood, I am listening to these things. So everything is result of the climate risk. Because as far as we people are growing in terms of economy, in terms of business, in terms of advancement of the technology, But as a result of all these, there's some side effect on our climate that is also there. So first we need to understand what kind of climate risks are there in the current scenario. And on the another part, our government is also very much concerned about this. So if we talk about Indian government, that is very much keen. In fact, when UN talks about their 17 SDGs, Sustainable Development Goals, our Honorable Prime Minister, he is always committed about all these things. Even recently, he has given one proverb, one sentence, or one mantra to everyone, that is life for life. So lifestyle for life. So he explained it. That means we have to ensure better lifestyle that is contributing towards our environment. Because when we discuss about ESG, then again we are going to discuss about environment part. When we discuss about BRSR, then again we have to take care about environmental part. So that is important for us. And I very much sure that today's very learned speaker, C. Jyoti Singh ji, she is going to throw some lights on what are the regulatory rules and regulations are there in India, and what kind of strategies one can plan at organization level or as the level of their individual level or as a consultant to mitigate such risks. Because when we discuss about controls in any organization or in fact in a government as well, so we assess the risk, then we identify what kind of risk mitigation strategies we can implement. So similar things are to be implemented in terms of climate risk also. So I'm very much sure, in fact, I'm confident that today's webinar is going to be very much insightful for every one of us, and everybody will learn a lot from today's session. I would like to congratulate Vice Chairman sir, and in the absence of Chairperson ma'am and Secretary ma'am of SRSB for putting all their best possible efforts to ensure that our members are getting enlightened on this burning issue on SRSB under the banner of SRSB. Thank you. Thanks a lot. Over to you, ma'am.
Thank you, sir. Thank you for such an robust information and foundation for today's webinar. Thank you, sir. Now we would like to request Utkarsh ji to introduce our speaker of today, CA Jyoti Singh ji. Utkarsh sir, over to you.
Sure, ma'am. Good afternoon, everyone. I today have the privilege to introduce our speaker, CA Jyoti Singh ma'am. Jyoti ma'am is a chartered accountant with 22 plus years of extensive experience in consulting, academic, research, and training in the area of ESG, sustainability reporting, sustainability assurance, internal controls, and risk management. She has also handled several clients for ESG engagements on BRSR and GRI. And ma'am has also conducted training at various forums. Further, ma'am is also a member of FICCI's Environment and Climate Change Committee. Ma'am is also working with CII on sustainability assurance training modules. Further, ma'am has delivered sessions at various forums and has authored articles and multiple publications. Ma'am was also formerly secretary SRSB board ICI, and currently she is a partner at Omnia Consulting Services LLP. She is a GRI and TCFD certified and is also qualified certificate course on BRSR. On behalf of everyone, we welcome you, ma'am, and we're looking forward to your session. Thank you, ma'am. Over to you.
Welcome, Jyoti. Thank you, Utkarsh ji.
Thank you. Thank you. Thank you. I think it is a real privilege. Thank you, Utkarsh ji. It is a real privilege to come back to SRSB, and it's not coming back. I was always there and I'll be always there. So thank you, Vice Chairman sir, and thank you all of you. And this topic is, I think, very, very relevant for all of us as professionals. So, and a very good context has been said by Vice Chairman sir and Dheeraj sir. So let me straightforward go to the presentation. I'm sharing my screen. Is it visible?
Yes, ma'am.
Fine. So the topic is very interesting. It is climate risks and regulatory landscape in India and understanding what are the compliance requirements for business. This topic is very important because climate risk, each one of us knows, is alarming. If you see this World Economic Forum report, so here you can see the climate risks for in the 2 years and 10 years frame. This is the latest report of World Economic Forum, Global Risk Report 2024. And this report says that environmental risks could hit the point of no return. Such an alarming statement that it could hit the point of no return. Such kind of damages will be made where the environment risks, the issues, the disasters which will be faced by the humanity, it will be to the point of no return. Those damage cannot be reversed back. So you can see in the 2 years frame, it was second, but in the 10-year frame, since the way the things are deteriorating, it is all the 4 top risks. They are based on climate risk. It is extreme weather events or critical changes to the earth systems or biodiversity loss and natural resource shortages and all. And you can also see pollution there. So these environmental risks, they are dominating the global risk landscape. And this is going to really present a global crisis. In 2024 itself, we are seeing so many floods, disasters, droughts. Recently in Kerala, we saw such disastrous landslides, which happened creating a lot of havoc. So in long term, like all these environmental risks, they will be creating more havoc if we all together don't come together and all the stakeholders do not do their part actively and do the proper interventions. So you see the urgency is there among key decision makers, but the World Economic Forum report says that there is lack of alignment in the work of those decision makers, and this is increasing the risk of missing the key moments of interventions. And this might lead to long-term changes to our planetary systems. So indeed, this is alarming, and we all know about the rising temperatures which are glaring at us. Now, this slide is from the World Economic Forum. Here, I had put this slide because I just wanted to bring the point to all of us that the climate risk is interconnected to many risks. Like this is the trigger point for a lot of social crisis, for existing, economic crisis. If you can see here, you see how the things are interconnected because there is climate risk, there is extreme weather events, then there is pollution. This is leading to natural resources shortage, and this is also impacting our chronic health conditions. And in a way, this all will impact to lead to economic downturn. So this is the time where we cannot ignore climate risk anymore, and all these things all encompass the they will contribute to a lot many things. And already like the global temperatures are rising, so we cannot ignore climate risk, and it is not something which is we are doing out of charity or which we want to do out of some purpose. This is the thing which is related to survival of the human species. And as I always say, like people, planet, profit, these are the 3 pillars. So if people and planet are there, then only the profit is there. So we have to take care of people and planet, and then only the businesses can survive and thrive. So I'm coming to this some few data which is related to India's climate risk situation. So we all know that it is always on the headlines that India is the world's 3rd largest contributor to GHG emissions. And however, if you see the per capita emission is quite low as compared to developed countries, like this is just 1.8 tons CO2 emissions as compared to USA, which is 14.7 tons, in China, which is 7.6 tons. But the situation is not good. And the population is giving these numbers, per capita low, but the emissions are quite very high. Then the 70% of these emissions, they are coming from 6 sectors like electricity generation, transportation, aviation, steel, cement, agriculture. And these are all very important sectors. So, you cannot avoid manufacturing there. So these are important sectors. Then it is said that if these climate risks, they are not checked properly, if proper actions are not taken at policy level, at regulatory level, then this can lead to a potential loss of around $35 trillion. So you just, we all should understand how risky, how grim the situation is right now. there is an IPCC report, which is like Intergovernmental Panel on Climate Crisis. And there's a report every year which it brings out, and it brings a global report. And then it also brings about the implications for, various countries. For India, it says that there is serious consequences for India in terms of increase in extreme weather events like heat waves, cyclones, heavy rainfall, sea level rise, floods, droughts, and we all are experiencing all these things. Like, this is the report, what it is saying, we all are experiencing. And it is very interestingly, I should say, or I should say very tragically, it says that even though we are taking actions for bringing the temperature to less than 2 degrees centigrade, but still, these actions are not getting so much results. They are impacted severely because there is a large population density and poverty. And in some regions, there is no capacity to adapt to these climate changes. In fact, there was a vulnerability test which was done by Department of Science and Technology, and they have identified 8 vulnerable states in India. And out of these, 3 they are saying are at the top of the list, which is Assam, Bihar, and Jharkhand. So you just see that how these states are vulnerable, and all the states are vulnerable, but these states where already the economy is not so thriving. And if the climate is also at its disaster, then the economy is definitely going to move down. Government is taking a lot of actions, like it is combating climate change through several programs. There is National Action Plan on Climate Change, where the government is having specific missions in specific areas, like in solar energy, energy efficiency, water sustainable agriculture, Himalayan ecosystem, which is very important, sustainable habitat, green India, and also disseminating strategic knowledge for climate change. In this regard, the government has also been launched various international coalitions, like it has launched coalition for Solar Alliance, then for disaster resilience, and at COP26 there has been other green grid initiative and all. So these initiatives are going on, and the Indian government has demonstrated that it is committed to lower down the carbon emissions, and it has said that it will do it around 45% by 2030. So this is being benchmarked from the 2005 level, and the mission is that by 2030, 45% of the carbon emission should be reduced. But this would be only possible if all the stakeholders come together, if the businesses, the civil society, the professionals like us, we all are together in this very, very important thing, which is impacting each and every citizen of the country. And here the government has also announced carbon credit trading scheme. This is a carbon market which is going to come, and it is still not functional, and nitty-gritties are being decided. So carbon market is where you can purchase carbon credits. If somebody is planting trees, so it can sell their carbon credits in that market, and the companies like which are having their carbon emissions, they can purchase carbon credit from there, and they can net zero them. So in a way, this carbon market is already in few countries, and India also, the things are on the way. The government has also issued sovereign green bonds around in January 2023 itself. There was around 80 billion INR sovereign green bonds issued, and these bonds they will be used for expanding renewable energy production and reducing carbon intensity. So you can see that the government is taking a lot of efforts, and the businesses should also come forward and take part in these efforts. In the latest budget of this in July, this 24-25, there are few important things which the government has done. Like it has introduced climate finance taxonomy, because when we are segregating information, if the taxonomy is not there, standardization is not there, then it is problem for the investors. So the government has now initiated development of a taxonomy to classify economic activities and aligning them with the climate commitments, enhancing capital availability for climate adaptation and also mitigation. Agriculture is one area which is most impacted by climate, because it is like agriculture, and it is hit by droughts and floods and everything. And so climate resilient crop varieties for this funding has been given, and the farmers will be also
Jyoti ma'am. Jyoti ma'am. Yeah, we are calling.
Taking a lot of initiatives, clean energy initiatives, and then there is establishment of carbon market. So we can see there are a lot of initiatives which the government is taking. Next, please. Next slide, please. So let us discuss what is climate-related financial risk. So climate-related financial risks are the potential risks which may arise from climate change or from efforts to mitigate those climate change, the related impacts, and also their economic and financial consequences. So the climate risks will be more like which are those which are having some financial or some social risks attached to it, which are having some impact of that. And IPCC says that climate risk as a code red for humanity. That is, it is so alarming that it is impacting each and everything. And so it is code red for humanity. Next. So what are the climate-related physical risks? Physical risks are the one because of which we will be having some economic costs and financial losses, which are going to result from the increasing severity and also because of frequency of extreme climate change weather events. And like we have discussed earlier also, these are like floods, heat waves, storms, heavy rainfalls and all. And these are increasing day by day. And you can see here that these are becoming abnormal day by day. Like earlier, near normal ones are very few now. The most of the natural events are above normal. So you can see the things are increasing and glaring day by day. Next slide, please. So types of physical risk there are two. One is which is very acute physical risks. That is, they are generally considered to consist of lethal heat waves or floods or something, and wildfires and storms, including hurricanes, cyclones, and typhoons, as well as extreme precipitations. Whereas there are chronic physical risks. Ye chronic, why are they chronic? Because they gradually they come into play. Like if the sea level is rising or average temperature is rising or ocean is getting acidified, so it will take time to get, its impact will be taking time. But the chronic things के साथ problem क्या है कि chronic things will have much more impact. Like they will have much more impact. Okay, so that's why they are more serious in nature. Next slide, please. So what is the impact of physical risk? The physical risk can have two types of impact. One is direct impact and the other is indirect impact. Okay. So the direct impact is like exposure to businesses, exposure to individuals and households, exposure to countries which are facing that climate shocks. So these are the direct impact. But there are also increased indirect impact, like effects of climate change on the wider economy is there. There will be, food grains shortage will be there. There will be changing prices. Supply chain will not be there. Sometimes we heard that these things are not available because there was drought in some area where these things were grown. So there are a lot of indirect impact also because of these physical risks. Next. Now there are transition risks. When transition risks are when we are trying to shift towards a low carbon economy. And so there will be shifting will require some regulatory and policy changes. Some disruptive technologies will have to be adopted. Some new business models will have to be adopted by the companies. Like you can see now that many flourishing companies, they are not having much assets. They are online. They are also the asset-based companies, they will have to gradually move to that model. So these are the transition risks. And in this case, you will have the companies will have to face the policy changes. Like there are now policy changes that the vehicles which are above of so many years, they will not be able to, you cannot use those vehicles. So these are policy changes. Then norms and technology, like the technology has changed a lot. So many things which have become outdated. So these are transition risks because of climate change. There will be adoption of new technologies. Like nowadays, you all must be reading about EVs, electric vehicles. So gradually electric vehicles are going to be more popular and the economy will accept them more, the people will accept them more. So the technology, the automobile companies will have to change the technology of production and manufacturing and everything. Next. So next slide, please. Yeah. So why the climate risk cannot be ignored? Because there is a frequency and variation of extreme movements. Like there are extreme monsoons are there. This is also where people are not going to have good income, and there will be insurance issues will be there. The insurance industry in the country is facing a lot of challenges because of these natural disasters. So there are various scenarios. If there is a 2 degrees Celsius rise, then what will be the impact on India? If there is 2.5 degrees Celsius rise, then what will be the impact? And the extreme which one could think of is a 4 degrees Celsius rise, which should never come, I think. So these are the various scenarios. And if the temperature rise continues, then the climate risk will increase many fold. Next. So this is a very good framework of TCFD. TCFD is Task Force on Climate-Related Financial Disclosures, and this is the most widely accepted framework in the global around the globe by most of the big corporates. So here they say that there's a transition risk which is going to lead to policy and legal risks. Then technology risk will be there. The market will also have changes accordingly. Then reputation will change. The companies which are not adopting new technologies, which are emitting high carbon emissions, they will face reputational risks. Then physical risks, we have already discussed about acute and chronic. Now, when there are risks, then there are always opportunities. There will be opportunities with the companies which are adopting new technologies, which are adopting going towards the low carbon economy. They will have resource efficiency will be there. The companies which are adopting the non-renewable energy sources, they will be more acceptable there. They will make more, the market will accept them more. And similarly, the products which are more efficient, which are emitting less carbon emissions, the consumers will also accept them more. So there is a risk and opportunity you can see here. Now, what is the role of the business? The business's role is to minimize the risk and increase the opportunities. For this, what do you require? The businesses require to strategically plan and to manage the risks. And you can see for all these things, if how they plan and how they manage the risk, it is going to impact their revenues, their expenditure, their assets, their capital and financing. And I would tell you a very interesting thing that the companies, the funding agencies, they are very closely looking at companies when they provide funding, that what is the climate risk that they are facing. And I don't know how many of you know that there are ESG ratings also, which give weightage to these climate disclosures, the climate risk of a company. And these ESG ratings are in the public domain, and the funding agencies, they take into account these ESG ratings also. So this climate risk is also going to impact the rate of finance which they are going to get. So in a way, it is going to impact their own expenditure, their own revenue, as well as their rate of interest which they will get if they want to take fund from outside. Okay, next please. So here the TCFD framework talks about what are the climate related risks and what are the potential financial impacts of that. All these risks are having some potential financial impacts. And that is why it is so important for us to understand what are these potential financial impacts. For example, there is policy and legal challenges are there. There will be increased pricing of GHG emissions. If GHG emissions are very high, the companies will have to pay more price for reducing those GHG emissions. Then there will be more obligations for those companies. There will be mandates on regulation of existing products and services. The government will put curbs that the vehicles which are emitting more or the factories which are emitting more emissions, they cannot work like that. They will have to change the way of working. They will have to adopt new technologies. Then in some cases, there can be exposure to litigation also. There are some public forums which, put litigations when there is a lot of pollution by any business. Then there are litigations also to that. So in a way, this will impact the increased operating cost will be there. The compliance cost will increase. The insurance premium will increase. There will be write-offs will be required. The assets which are not being used, they will have to be impaired. Then there will be early retirement of existing assets because there has been a policy change. Similarly, there can be reduced demand for products and services which are having more carbon emissions and which are costing more. We all are going for products which are which are cheap also, and which are not having so much carbon emission or impacting nature. Similarly, technology is if there is a technology related risk is there, like there'll be substitution of existing products and services which with lower emission options will be there. The companies will have to substitute them. Then there might be cases that, if the company is investing in some new technology and it might become unsuccessful, so there is that risk also. Then there will be cost also for transitioning to lower emissions technology. Now, how this will impact, the financial impact will be there. There will be write-offs will be there. They will reduce demand for products and services which are now substituted by more efficient products. Then R&D expenditure will have to be made by the companies in new and alternative technologies. Companies in India and abroad, they are putting a lot of investment in R&D expenditure to how to reduce the carbon emission of the products. Then capital investments will have to be made, the new technology developments, and also the costs which will be there to adopt and deploy new practices. Similarly, when we talk about the markets we have just discussed, like changing customer behavior will be there. There will be uncertainty in markets. Sometimes the market is not clear that which type of new technology is coming, because the climate risks are so much. So which technology will be more adaptable to the new risks? Then increased cost of raw materials will be there. Yeah, as you all see that sometimes some material is not grown properly because of some climate risk, because of flood and droughts and all. So this will increase the cost of material. And there are a lot of financial implications because consumer preference is going to change. Production costs will increase because your water will become very costly, your energy will become costly. Waste treatment has become very costly because it is very much required that the waste treatment should be there. The companies cannot just throw away waste like that. They should treat it properly. So waste treatment has become very cost which the company needs to incur on that. Then shift in energy costs, like and now there's a reputation also with the So we're talking about these risks which are there. Climate related risks are there. So market we were covered. Then there will be market rate and repricing of assets will need to be done, like fossil fuel reserves, land valuations, and all securities valuations. They will have to be done. Next slide, please. Now, the reputation risks will be there, like the customers will be shifting their preferences from, and there will be sectors, some sectors will be there, which will not get new demands. So there might be issues in there also. Some sectors might be there where, there'll be decreased production capacity or planning approvals will be decreased. Sometimes there might be supply chain interruptions also. Then the stakeholders will also be concerned if there are some issues with the climate risk. And if some news items come for some company that their work is impacting, the lot of carbon emissions are there. If you all remember that there was some incident of some soft drink maker that they were using water reserves too much. So there was a lot of negative news about that soft drink maker, and this impacted their business also. Now, when we talk about the risk of acute and chronic, we have discussed what is acute and chronic. So they will have the same kind of impact. And in fact, the chronic will have more impact in the long term, sorry. And in that case, the companies will have to pay maybe increased insurance premiums, or they will have to, increase operating costs will be there. Next slide, please.
So here we are discussing about climate related opportunities, that what opportunities the companies will be having if they are going to properly mitigate those risks, strategically take proper steps. So first, they will be able to do resource efficiency. If they are using more efficient modes of transport, or if they are using more efficient production and distribution process, and they're doing recycling. Like we are, like there's a steel maker. They who are like we are dealing with them, and what they're doing is that they're using steel scraps to prepare steel sheets for OEMs. So in a way, they are really recycling, and this has given them a lot of good funding from outside also, because they are recycling steel scraps from other manufacturers and using them. Then moving to more efficient buildings will be required. You all know, like there's a lot of green buildings concept is there. Then reduce water usage and consumption has to be if one is doing. So it is going to the cost will be reduced. So in a way, this is going to reduce the operating cost, the increase the production capacity, increase the revenue. Then also increase value of fixed assets. Like if the company is having new assets of new technologies, the value of fixed assets will increase. And the workforce management, they will be quite happy because of improved health and safety. A company which is not using blast furnace, but it is using electric furnace, that in that company, the workforce will be happy. Similarly, the energy source, if the non-renewable energy sources are being used, the new technologies are being used, there is participation in carbon market. So this is also going to give you opportunities like reduce operational cost, reduce exposure to future fossil fuels price increase will be less, because if the fossil fuel price is increasing, there will be reduced exposure. Similarly, if you talk about the products and services, the new products which are innovative after doing R&D, where the companies are coming out with some solutions which are more adaptable to the new climate, which this is going to give them more revenue, and they will be more competitively better placed. The consumers will support them more. The consumers will demand is shifting towards such kind of products. Next, please. So there are a lot of few major global reporting frameworks are there. Like one is CDP, which is Climate Disclosure Project is there, where the company's data is being rated on the basis of their climate disclosures. Then TCFD we're talking about, and TCFD is the most widely used this framework. And right now, like IFRS is also following this TCFD. The IFRS climate standard, which is S2, that is based on TCFD framework only. Then GRI is the most comprehensive one, and it is the the earliest one. And it is also covering a lot of environmental factors. So many companies are using GRI framework also. Next. I was talking about IFRS. IFRS, as you all know, that there is an International Sustainability Standard Board, and this standard board has come out with two standards. One is on general disclosures, and the second is on climate-related disclosures. And the climate-related disclosures is the framework which is based on TCFD. And here the governance strategy, risk management, all these factors are put into place. Then European Union is moving ahead with their corporate sustainability reporting also. Then a new thing which has come up is nature-related financial disclosures. This is a new one where they are saying that you have to also disclose about the nature-related products which you are using. If you are using ocean or land, then this is a nature-related product which you have to, nature-related thing, and you have to financially make disclosures of them. You can't say that, okay, Mother Nature has given us this, so we can use it anyway. No, you have to be very sure how you are using it. You're not polluting it. So the new concept which is coming is nature-related financial disclosures. Next, please. So now in India, the climate risk mitigation journey had started as long as in 2007, where RBI has published the CSR Sustainable Development. Then in 2012, NVGs had come, National Voluntary Guidelines, which had a lot of emphasis on environmental responsibilities of businesses. Then in 2016, even banks also published their NVGs for responsible financing. Now you can see that after 2019, the things are coming at a very fast pace. Post-COVID, the regulators are very, very active in this space. And now the RBI has joined an international network for greening of financial systems, where a lot of emphasis is made that how the network of financial system should be green, how the finance should move in the direction of low carbon economy. Then Ministry of Finance in India also announced the formation of task force. And a very important step was that BRSR was also came. And BRSR, most of you must be knowing that business responsibility and sustainability reporting had come and for top 1,000 listed companies by market cap. And it requires a number of environmental disclosures by the corporates. And now, if you pick any annual report of any big company, even if it is not covered into the top 1,000, many of them are voluntarily disclosing a lot of environmental factors. Then in 2023, there was a green deposit concept came, and 2024 latest, the RBI has come out with a publication for disclosure framework on climate related financial risks. 2024, and this is very, very important because of the banks, which are the backbone of the economy of any country. They are going to focus too much on climate related financial risks, and the capital and the funds will flow accordingly to the low carbon economy. This is the purpose behind bringing about out this disclosure framework on climate related financial risk by RBI. Next, please. So I was talking about the BRSR framework. So there are around 9 principles in BRSR framework. The principle 6 is very, very important, which is on that business should respect and make efforts to protect and restore the environment. So this principle 6, if you see like disclosures, there are maximum disclosure in principle 6. If you pick up BRSR report of any corporate, you will see the maximum disclosures are the maximum essential indicators and leadership indicators are in principle 6. So principle 6 recognizes that environmental responsibility is prerequisite for sustainable economic growth and the well-being of society, and it makes imperative for the businesses to address all the issues like pollution, biodiversity conservation, sustainable use of natural resources in a very comprehensive and systematic manner. And this principle 6 is aligned with SDG 11, which is for sustainable cities and communities, and with SDG 13 for climate action, and SDG 14 for life below water, and SDG 15 for life above land. And the businesses are encouraged to assess environmental impacts of their products and operations, and also to take steps to minimize and mitigate adverse impacts. So we will see what are the disclosures under Principle 6. Next, please. So Principle 6 disclosures we'll be discussing in the next slide, where the Principle 6 is covering all the greenhouse gas emissions, the water footprint, the carbon footprint. Please move to the next slide. Yeah, so this is on water consumption. So the BRSR requires that the water consumption of a corporate should be disclosed in the BRSR, that how it is sourcing water, how is it consuming water, then how it is reusing and recycling water, so that there is a minimum dependence, the dependence on the fresh water should be reduced. So there are 4 parameters which have to be are there. First, this requirement is on water withdrawal from various sources, which is an essential indicator. That means any company which has to comply with BRSR, it has to disclose that how it is withdrawing water, whether it is from surface water, groundwater, seawater, or other sources. Then implementation of zero liquid discharge. This is a leadership indicator. Here, the company has to publish whether it is making any discharge of wastewater outside its premises. So zero liquid discharge is a good methodology where the companies try to treat the wastewater in their premises only and don't harm the outside water bodies. No information on the treated or untreated wastewater discharge. Now, this is an essential indicator that how much water you are the company is moving out of the company premises without being treated, and how much after treatment. And also on water withdrawal. This is the leader indicator. Here you can see it is saying about areas of water stress. So there are certain areas of water stress by the government. So leadership indicator talks about them. Next. After water consumption, we'll cover the GHG emissions. GHG emissions, this BRSR requires 3 types of scope 1, scope 2, scope 3, and also the information on its projects related to GHG emissions. So in a way, any company which is complying with that has to give information about scope 1, scope 2. Scope 3 is still a leadership indicator. Next, please. Now, air emissions are there. So air emissions are there where NOx, SOx and all has to be there. Then waste generation is very important. Waste generation, how the waste is being generated and how it is disposed. So at one place, the company will have to show that it is reducing its waste generation, and in the other place, it has to show how it is being disposed of. So whether it is disposing of it in a responsible manner, and there are certain authorized dealers like by the Pollution Control Board who treat the waste, and also it is required that most of the companies, they dispose of through them only. And they have to also have projects or offices which are, if they are having any projects or offices around ecologically sensitive areas, then they cannot work there without having proper clearance. And also they should comply with all the clearance conditions. I think this is very important, because if the ecologically sensitive areas, they are not treated safely, and if things are going on like that, then these lead to natural disasters in the longer run. Now, environmental impact assessment has to be mandatory reporting has to be done. Each company has to make an impact assessment about what projects it has taken up for assessing what is the environmental impact it is doing. And now complaints, if any, which are received, or fines or penalties imposed under the environmental acts. So it has to be mandatory report that what are the complaints and fines. So in a way, the investor or the stakeholder will come to know whether there is non-compliance of any environmental regulations by that company. Next, please. Energy consumption, again, this is very important, because the country wants to move towards lower carbon emission. And so energy consumption, how it is being done, what is the total energy consumption, what is the fuel consumption is there. This is an essential indicator. And here now, there are important new terms of energy intensity also. And energy intensity is where you have to calculate that per rupee of turnover, how much energy are you consuming, the company is consuming. Then information on what are the energy resources, whether they are renewable sources or they are non-renewable sources. Non-renewable sources is a leadership indicator here. Then there is a purchase, achieve and trade scheme, where the companies are incentivized by the government if they reduce their carbon emissions by using new technologies. So they have to, they are given some incentives. So if they are a part of any PAT scheme, then they have to report it in the essential indicators that how they have been complying with that PAT scheme. Next, please. After now this, I wanted to just draw the attention of all of you. BRSR core, like it came in July 2023, where it has got 9 ESG attributes. Now these ESG attributes, why BRSR core is important? Because assurance of BRSR core has to be given. If companies like for 24-25, like 250 companies will be required, top 250. So if you see here, these 9 attributes, out of them, the 4 attributes, they are on environment only. Like this is greenhouse gases there, water footprint is there, energy footprint is there, embracing of circularity is there, that there should be circular economy should be there, the reuse, recycling thing should be there. And now one more feature which has to be, in this BRSR core, it has to be assured, is of purchasing power parity, where there is a comparability about the USD INR, like how much money you are spending in USD, in terms of that, how much emissions you are doing. Purchasing power parity gives you comparability at the country level. Next slide. So I have just taken a case study of Hindustan Unilever Limited. Its BRSR report for 23-24 is out. So in BRSR, apart from Principle 6, if you all know, that there is in Section A also, they have to give the material risks which the company is facing in Section A of the BRSR report. So in that, they have to give for each material risk what is the rationale for identifying the risk or opportunity, how they are mitigating that risk, and what is the financial implications of the risk or opportunity which is there. So here you can see this snapshot I have taken from their BRSR report, Section A. So in the actual report, you can see that they have taken climate risk as one of the material risks which the company is facing. And they say that the climate change is a major risk which is affecting business in the short, medium, and long term. And we face immediate physical risk like extreme weather and water scarcity. And they responsible practices are crucial, therefore, for long-term value. And transitioning to a low carbon economy will may bring regulatory and market risks such as changing consumer preferences, higher product costs, and future government policies. So this is the rationale why they have identified climate risk as one of the risks. Now, what they are doing, what is their approach to adapt or mitigate? For that, to address the climate change, they have committed to reducing their carbon footprint by investing in new technologies, by switching to new renewables and transforming factory operations. And this will, and they propose that this is going to, as per their plan, this is going to have around 45% reduction in their energy consumption. And additionally, like they have also expanded the renewable energy use by installing more solar plants at their offices and factories. Now they're also talking about what are the financial implications. And these are the heads which are there in the BRSR report. For each material risk, these disclosures are required. So what is the programs to mitigate risk emanating from climate change, which can lead to incremental cost in the short to medium term, and which can be partly compensated by increased efficiency? And the management of HUL feels that these programs, they are going to strengthen business resilience and protect long-term value. So see how these risks, if they're identified at the right time and if they're mitigated at the right time with proper strategy by a business, then how it is going to strengthen its long-term value, how it is going to make it resilient to the future risks. Next slide. So here they have all given more rationale for identifying the risk or opportunity. There are around 4 more. Like one is on the rising temperatures and extreme weather conditions. They are going to damage their assets. They're going to affect agricultural value chains because they have many products which are based on agriculture. So this is going to impact the production cycle. The climate change will also impact their productivity and supply chain disruptions. And erratic precipitation may also impact their water availability for operations and farming. Now, there are transition risks also, which will include higher costs for regulatory compliance, penalties, risk due to new climate-related regulations are coming. So this is the rationale for identifying the risk or opportunity. Now, for that, the physical risk management they are doing by with climate risk modeling. And so climate risk modeling is a type of scientific process where the mitigation strategies are taken based on the various scenarios. Then they want to promote climate smart agriculture, which are heat or drought tolerant varieties and which have precision farming is there. Then they want to enhance farmers' resilience through capacity building programs, implement social forestry, soil and moisture conservation, and biodiversity conservation programs. They want to also ensure water scarcity security with a water stewardship approach in specifically in the areas which are high stress areas. They also, in order to reduce the supply chain risk, they, they also want to diversify the supply chain and also plan out for the contingencies. They also plan to map the climate risk, build their adaptive capacity, and also invest in resilience measures. So you can see these disclosures in the BRSR. These are related to climate as a climate risk. How many disclosures a company is giving? There is proper strategy which a company is telling to its stakeholders that, look, I know these are the climate risks which I will be facing, and this are the risks, and how what steps I want to take, and how this is going to impact my future. And if you see any annual reports, in fact, I think you all should read annual reports because they are the first-hand information directly from the businesses. So you can see in the director's report, in the management discussion analysis, there are a lot of areas of climate risk which are being discussed. And everywhere the agenda is, the vision is that how the climate risk should be reduced and how they should be a sustainable company. Next, please. Now, this is what we were talking about, this new RBI's draft disclosure framework on climate-related financial risk. So the banks in the country, they have been, making some climate-related disclosures, but they were not so much robust. They were, not so much standardized. That we had done a study on annual reports of few banks like private sector banks and public sector banks. And we saw that lately, of late, like last 2 3 years, last 2 years, in fact, the banks have increased their disclosures on climate-related risk, and they have many of them have also adopted the TCFD framework, but that was not standardized. And um, uh, last slide only, please. Yeah. And many of them, they are also there's a global pressure from the banking regulators also, and they are all signatories to PRI, Principles for Responsible Investing. And so the now to standardize these practices, the RBI has come up with a disclosure framework on climate-related financial risk. So what I'm trying to bring the point is that earlier also climate disclosures were being made by the banks, and in last 2 years there were a lot of disclosures after COVID. But to standardize them, this disclosure framework has been brought by the RBI. So it mandates the regulated entities to disclose information on climate related financial risks and opportunities, which will be covered under thematic pillars such as governance, strategy, risk management, and metrics and targets, with a phased implementation plan. So these four pillars are based on TCFD framework only: governance, strategy, risk management, matrix, and target. And IFRS S2 of climate-related disclosures, that also is based on this TCFD framework, where all these four pillars are being covered. And this has been aligned with the global standard, this RBI disclosure framework, like with European Union's Corporate Sustainability Reporting Directive and United States SEX climate disclosure rules, so that to ensure that India's financial sector remains competitive and resilient. And there is a significant stride toward integration of risk and opportunities in the Indian banking system. If you go through the reports of the banks, why banks are important? Like, banks are important because they are the backbone of the economy. So the funds, the capitals, they should move to areas which are sustainable, which are there is the it should you push the low carbon economy transition. So that's why the banks, if they the climate risk are taken in seriously, it is going to set the other business also into line. And this disclosure framework will ensure that there is consistent and comparable disclosures, so that there is mispricing of assets is mitigated, there is not misallocation of capital, and there is a market discipline also, if all the risks are properly identified and mitigated by all the various banks, and also to the lenders, to the borrowers, and all. Next, please. So we're talking about okay, so I have a question that can you elaborate on the role of the National Action Plan on what is the question? Can you elaborate on the role of National Action Plan on climate change and other government initiatives in shaping the regulatory landscape for business? See, the National Action Plan is a high-level plan where there are commitments are there. For that, there's a high-level plan is there, but the businesses can contribute to that high-level plan only through these through these frameworks. Like the BRSR, it is saying that you reduce your greenhouse gas emissions, you move to low carbon economy, you do R&D, and you disclose that how much R&D you have done, how much investment you have done for innovation, for technology, and all. So and like RBI is coming, so these high level policy frameworks, they are implemented through these disclosure frameworks also. Are there any upcoming regulatory changes or new policies that businesses should be particularly aware of in the next 1 or 2 years? See, BRSR has come lately, of late, like from 20 to 23 only, it has become mandatory. So BRSR is the most important thing which the corporates are, the corporates have to comply with. And now, like, they can't show the same report every year. Every year, you can't say that my carbon emissions remain same. If you have started disclosing it from 20 to 23, so you have to show that what are the improvements there. So these things are stabilizing now. The BRSR disclosure is stabilizing. So these are, in fact, these are still new in the market. Like, this is the third year now the BRSR will be coming. So BRSR is there. Then the most important thing which we're discussing is this RBI's draft disclosure framework on climate related. This is still in draft stage, but it is going to be adopted soon, and this is going to impact the businesses across. So in a way, BRSR is very important, and this RBI climate disclosure framework is very much important. And if you follow news, you would be seeing that a lot of companies, they are branding too much on that how their carbon emissions they are reducing, what kind of green initiatives they are taking, and this is impacting their overall reputation, and also their stakeholders. They are engaging the stakeholders very positively, and in a way, so these things are going in the long term. So right now, BRSR is the main disclosures thing which can be done. Now, there are thematic pillars of governance and strategy. Thematic pillars of governance and strategy, there. Sorry, 1 minute. So thematic pillars are there. So we are talking about four thematic pillars. Four thematic pillars are there. One is details of the governance processes, controls. Governance is there, so they have to disclose the details of the governance processes and the controls and procedures used to manage the climate-related financial risk and opportunities. The board oversight of now in this there are two disclosures which has to be made. One is board oversight of climate-related risk and opportunities. Senior management's role in assessing and managing climate-related risk and opportunities. So these are the disclosures which are required to be made. Now, thematic pillars are there. Thematic pillars are there, which is like describing the regulated entities' strategy for managing climate-related financial risk and opportunities. This will include identification of risk and opportunities over different time horizons. And this will require, this covers 3 types of disclosures. Identify climate-related risks and opportunities over short, medium, and long term. Okay, so over short, medium, and long term, what are the identified climate-related risks and opportunities over short, medium, and long term? What are the impact of these risks and opportunities on businesses, strategy, and financial planning? And how the resilience of the strategy is there under different climate scenarios. So, there are different climate scenarios which the bank has to present in the as per the TCFD requirement also, that if this is the global temperature increases there, 2 degrees centigrade increases there, or this much is there. So what step they are going to take to mitigate, how well they are prepared to adjust to that kind of scenarios. Because, these, when there are a lot of lenders are there, you have a lot of people who are taking loans from the bank, and now if the droughts are there, the climate conditions are not good. So in different kinds of scenarios, how they are going to mitigate those risks. Okay. Next slide, please. So we are going to the fourth thematic pillar, which is now risk management. So after governance and this, we are going to that. Here, the bank needs to outline the processes to identify, assess, prioritize, and monitor what are the processes for the climate-related risk and opportunities. And it is very much important that how they integrate them to the overall risk management framework. So this is very important, that after you identify them, then how they're integrated in the risk management framework. So 3 important disclosures are required under this risk management thematic pillar: policies and processes for identifying, assessing, prioritizing, and monitoring climate-related financial risk. Here, if you go to any good bank report, like on the top bank reports, so you will see that there are a lot of policies on this climate action policies are made. There is ESG committee which is working on that, or in some cases, if the ESG committee is not there, then the sustainability committee is formed, who takes care of these factors. Then processes used for managing climate-related risk. What are the processes which are used for managing those risks bank is taking, and how this climate-related risks are integrated. So there are various strategies which different banks take for integrating those climate-related risks. Now, thematic pillar 4 is on metrics and targets. So here, the details of the performance has to be given in metrics, that what are the climate-related financial risk and opportunities. So here, like every bank, they can put there some targets, and they can define some metrics as per the requirement, that what suits their business more, and they can show that how they are moving towards those targets. And under this heading, they have to specify what kind of metrics they have developed for assessing climate-related risk and opportunities. And this is, I think, something more important, but a little difficult because it requires a lot of detailed study to finalize those metrics and what are the important areas first of all, which are most important, because you cannot have all the climate risk and opportunities. Then after that you have to see which have the maximum impact, which will be more likely, and which of the risks are more likely, and which have the more impact. So in a way, we make a materiality matrix kind of thing with the likelihood and impact, and on the basis of that, a matrix will have to be developed. Then also the scope 1 and scope 2 and scope 3 emissions. What are the targets for managing those climate-related risk, and what are the progress? So these 4 thematic pillars are very important, and some banks are already making on that. But now, after this guidelines are mandated, then all the banks will have to comply on them. Although there is some timeline has been given for the banks to get ready for all these processes, to streamline the data structures and control framework and all. So next slide. So the applicability is like they are applicable to all scheduled commercial banks, but they exclude local area banks, payment banks, regional rural banks. Then tier 4 primary urban cooperative banks, which are UCB small banks, they are also for them also it's applicable. Then all India financial institutions, which are there, big financial institutions, and top and upper layer non-banking financial companies, NBFCs. Other entities, they can also voluntarily make these disclosures. Okay? Now, timelines are also there. So since these disclosure requirements, they would require the time for the banks to develop the internal policies and also develop the reporting mechanisms. So RBI, it has just provided a staggered approach for adoption of them. And some additional time has also been provided for disclosing data related to metrics and targets, because that is little difficult for them. So here, from financial year 2025-26 onwards, governance strategy and risk management will have to be done by the scheduled commercial banks and financial institutions and top layer NBFCs. And for this new this urban cooperative banks, it is from financial year 26-27 onwards, the governance strategy and risk management. And for metrics and targets, it is from 2020 to 29. So you see, like a little time gap is also being given for the banks, but voluntarily many banks have already adopted this. Now we have a question here. What are the main challenges businesses face in trying to comply with India's climate regulations, and how can they overcome those challenges? The challenges are like, as we have seen, that first of all, a strategy needs to be made by any business. So first, the strategy is the most important thing which any business will have to make. And for that, there should be willingness among the top management to give climate risks as priority. Okay? If the companies who are giving climate risk as a priority, then only they make the strategy for that. And then only they work towards that. And it needs capital allocation is also capital is also needed for adopting new technologies. Sometimes I don't think that there is a issue of new skills or something, because we have people, experts who can help on all those things, and the companies who want to do, they are doing those things. But in fact, I would like to share that companies which are profitable, we have interacted with a few companies. So companies who are making good profits, they are still able to shell out some, allocate some capital towards these kind of things. Because the benefits of these things, when you are adopting new technologies, the cost is too much in the starting, but the benefits start accruing after some time. So those companies which are not making some good profit, or which think that still their business is not so stable, they are not able to move towards those area. But still, if they want to survive in the business, they will have to do that. So these regulations are the challenges are mainly in the case of air emissions. If some companies are polluting companies, for them it is there will be more air emissions will be there, more GHG emissions will be there. that is the main problem issue with them, and they can overcome that by adopting new technologies. Like if I tell you, like in steel sector, we have seen few companies who have moved from blast furnace to electric furnace to reduce the GHG emissions. But initial investment in electric furnace will be too much. Or if I give you an example of a packaging industry, the packaging industry, anybody will say it is very polluting company because packaging and all it is. But if they move towards recyclable kind of packaging, reusable kind of packaging, so initially it needs a lot of investment, and the things start moving on after few years only. So adoption of new technologies needs investment, and the board of directors and the stakeholders, they should be ready to take that leap of that they want to invest in those new technologies and they want to shell out that kind of thing. The next question is, how can SMEs navigate the complex regulatory environment without substantial resources? See, for the SMEs, I think again it will depend upon SME to SME. If it is a SME which is in a non-polluting kind of industry, which is doing some service industry, then for them, if they are having few carbon emissions, then reducing those carbon emissions is easy. That they can set off by planting more trees or being more sustainable, or doing some other work where they can set the carbon emissions low. And if I tell you about, like, I'll give you example of a small firm. Okay, let me give you example of a small consulting firm. A consulting firm, it can reduce its carbon emission by switching off to online mode for twice a week, so that the employees are not commuting, or by sharing, providing some sharing cab services. These kind of things they can do. But SMEs, if you talk about SMEs which are into manufacturing or something, and where the pollution levels are there, if they're manufacturing something, then in that case they will have to adopt new technologies. And as I said earlier a number of times during this presentation, that they can't avoid it, because in the long run, the products which are which are having high emissions, something, they will have to move out of the market. There is no choice. So they should, I think there are a lot of support also. The government is also providing incentives and all to the SMEs to move to that, low carbon economy is there. And okay, let me also discuss here one more important point. I don't know how many of you know that the value chain thing is coming in India, where the BRSR value chain thing is required, value chain partners. The big companies like right now, top 150 companies, they have to disclose from this year their value chain partners का ESG. Value chain partners हैं कि उनके downstream and upstream जो भी हैं, तो उनको they have to disclose their ESG KPIs, environmental, social, and governance KPIs. So now what will happen is, if a small SME, if a SME wants to work with a big company, so if it is not fulfilling those conditions, it will not be able to have business with those big companies. Okay, so this is now a prerequisite for doing business for that SME. So they will have to move to that zone where they are complying with the environmental things. Okay. Now, what resources or tools are available to help businesses stay informed with complying with climate regulation, and how can these be best utilized, these resources? See, there are regulations, like we all know, BRSR regulations are there, and when they are preparing the reports, they have to prepare the reports, and companies are aware that they have to file BRSR, so they know the requirements of there. And what I have seen in companies is there that like big companies, they all have their sustainability officers are there, CSOs are there, so they are always there to help the companies. And in small companies, even if you can't have a person who is totally towards only sustainability as a sustainability head, but some person can be given charge that, okay, you should look after this also, and that person can take care of that and keep track of what are the changes. And generally, these changes for businesses, they come through MCA, SEBI and all only. So they can easily keep track of the changes which are coming, and they can follow them. And since there are professionals there, because if you see the BRSR report, you have the company secretaries, sometimes they written, or some person who is responsible for BRSR. So those people are aware of what are the requirements. So that is not an issue. Being aware of the requirements, I don't think that is an issue in today's digital era. The problem is that how you are going to enact upon them, that how you are going to reduce your carbon emission, how you are going to reduce your waste and all that. For that, you need to have a strategic plan. You need to know how to allocate your capital, how to have funding, financing for that. And unless and until the business understand that this is a need for the survival of the business, they will they will not be able to make a strategy for that. If company knows that I have to do this if I want to survive in the business, then they will have to put some funds for moving towards the low carbon economy. Next slide, please. So here I have taken an example of this State Bank of India. That State Bank of India is saying that we have responsible banking and impact. This is the sustainability report, impacting sustainability beyond operations. So here I just wanted to show this report because I wanted to show you that how the things are moving, how the banks already, before this disclosure requirements of RBI are coming, banks are already disclosing. So they are saying it's the largest public sector bank in India. We are committed to create significant positive social and environmental impact. And they're endeavoring that the bank engages in both direct and indirect measures. And it also recognizes that they environmental friendly banking should be there. Now they have put out these 8 important initiatives as part of that. One is they are promoting green energy initiatives and products. So any products which are sustainable, they are promoting them. Then green ESG borrowing through lines of credit. If a person wants to do a business which is sustainable, which is having low carbon emission, which is a move towards the low carbon economy, then they are providing them funding. They are promoting those kind of businesses. Financing infrastructure is there. Financing RE initiatives which are sustainable. These are they are saying they're financing those things which are sustainable. Suppose somebody is working towards solar panel, or somebody is working towards some technology on reducing pollution, then they are financing those kind of initiatives. Then they also do ESG due diligence along with credit risk assessment. So earlier, when a loan was given to a person or an institution or a company, the credit risk assessment was done to just check what is the capability of repaying power. But now the ESG due diligence is also done. That whether that what kind of ESG risk they are taking, whether environmental risk is there in their business, or the social risk is there. You must like we have come across news where some factory is closed because of people are not working there, or also the some due to pollution levels high, which are more than the allowed ones, the factory get closed. So these kind of due diligence are required before financing. Then ESG financing framework they have adopted. They are also giving green term deposits. They're like we are talking about the sovereign green bonds, like the money which is deposited by there will be given to only those companies who are working towards some green initiatives for carbon emission lowering, or some water restoration, or reducing pollution. And similarly, green investments also they are boosting. Next, please. Then State Bank of India's report, if you can see that it is also saying what are the lines of credit you can see. So you can see that they are having so many lenders who are giving them for those, for climate finance, for supporting climate mitigation and adaptation projects in India. Okay. Then with the climate financing, solar, you can see here solar, wind energy, MSME and renewable energy. They are projects of small and mid-sized corporates. So you can just see that how much funding the World Bank is giving funding for grid-connected rooftop solars, for residential rooftop solar programs, and you can see there millions and millions of money is there. Then similarly for renewable energy financing projects are there. As on 31st March 2004, there are so many projects for renewable energy financing are there. So you can see that how much stress is being made is there on this sustainability aspects on moving towards low carbon economy. So we have few questions here. What obligations would these regulations bring on the smaller businesses who are part of supply chain of the larger corporations? What changes will smaller businesses need to make? So see here again, we are referring to, if you are referring to the BRSR core value chain partner requirement, so BRSR core KPIs are important. The BRSR core KPIs have 9 ESG attributes. So SMEs should start working towards those 9 attributes, where 4 of them are on environmental aspects, then other 5 are on social and governance aspects. So they should work on those aspects if they want to be part of that value chain where the larger corporates are ready to work with them because of these regulations. So BRSR core, BRSR core has been made as the basis for a number of things by the government, for, assurance purposes, for value chain purposes, and even for ESG rating. For ESG rating also, there is a core rating which the CRISIL and all will be giving from this year based on the assured BRSR core data. Okay. Next question is, with the China one philosophy being widespread and the world still addicted to quick output, is it really sensible to imagine that India will successfully wean itself off coal and risk growth? See, this is a very high level question because this is a regulatory question, but still, as a country, we are committed and we are working towards it, and we have a lot of policies and NDCs are there. So, and I think we are having so many, international forums where there's so much of stress. If you all are aware, like of G20, COP26, COP27, and all are happening. So these things are, like at a higher international level, I think climate risk cannot be ignored anymore. The next question is, what specific accounting and reporting standards should CS be aware of when advising businesses on climate risk and regulatory compliance? So we are discussing that only. The BRSR is the fundamental basis for any big company. Then we have TCFD framework, you should know. And in fact, TCFD framework is like you all should study. And because that is a basis, and going forward, when IFRS S2 is going to come, the standard 2 on climate related disclosure, then you will be able to understand it more because you have the understanding of TCFD framework. And there is a greenhouse gas emission standard also, IC 3410. So that is also important. So this one should have knowledge of IC 3410. And I would always suggest that both the reports of the companies, like they are having, their assurance reports are there, their disclosures are there, there is greenhouse gas emission assurance report is there. So if you go through those reports, you understand what are the processes, what are the things, what are the companies disclosing, and how the assurance reports are there. That is the first-hand information for any of professional who wants to understand these things. Now the next slide is on net zero. Net zero energy for industries. So the journey, sorry, net zero journey for industries. So I just wanted to cover it, that you all must be listening that many companies in India and abroad, they want to be net zero. Net zero is like you are trying to, whatever carbon emissions you are doing, you first try to reduce them, and then whatever are left, then you try to, mitigate them, to offset them. So why is net zero important? Because India wants to achieve net zero emissions. And for that, the cleaner technologies are being adopted. Electrification of fossil-based energy sources is being done. Circular economy is taking up a lot of much. Circular economy is booming. And, circular economy is also creating a lot of opportunities. Many companies, they are using waste to produce some new things. So these kind of innovative business ideas, business models are also coming up. So why are actions toward net zero important? Because it will, the stakeholders and the investors will understand the strategy. So that what the company is taking, and how the company is moving towards net zero, how it is contributing to the climate goals, and it is definitely going to, enhance reputation. And one more thing is that it is going to support the carbon markets. If there are zero carbon emissions are there, then how, which cannot be reduced. So one will have to purchase carbon credits from the carbon markets. So this is a kind of, ecosystem which will be developed. An ecosystem which will be developed based on the new climate risk. Climate risk is going to set up the new ecosystem of how businesses are being done. Next slide, please. Here we have just put together some companies named like Infosys, Mahindra, TCS, Wipro, HUL, that how they are moving towards net zero. Most of them, they are moving towards, renewable energy. Like Infosys says, we are ambitious. There is a science-based target also where you have to tell them that, okay, we are going to be net zero by this year, and then what steps you are taking. So, and they have some, process for that you have to do this much percentage every year. So many companies have, adopted the science-based targets to reduce their GHG emissions, and they are focusing on enhancing their energy efficiency, on promoting sustainable operations, and Infosys is implementing energy efficient technologies in its data centers, because there is a lot of carbon emission because of these data centers, because of usage of these data centers. So Infosys is also implementing energy efficient technologies. Here, Mahindra, you can see they are also they have also adopted science-based targets, and they are adopting renewable energy. And a very important thing which Mahindra is doing is that they are promoting electric vehicles. Okay. Now TCS is it aims to reduce the carbon emission by enhancing energy efficiency, by increasing use of renewable energy, and it is also developing green IT solutions for its clients. Like, not only it is doing for itself, but it is also trying to develop green IT solutions. Technology is an enabler. Like, technology can be used to move more towards green solutions. Many things which were done manually, uh, 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 many things which were done manually, like if technology is being used to carbon emissions. If you can see, the online meetings are one of the biggest example which people quote. In case of Wipro also, they are doing, and also they are Wipro is trying to integrate these sustainability strategy in helping clients achieve their sustainability objectives. HUL we've already discussed. So let's move to the last slide. Yeah. So in the last slide, we'll talk about what are the professional opportunities. See, when any new things takes over, when things change, the models change, when you have new risks in the market, then those new risks will give rise to new opportunities. As professionals, it is for us that how we are reskilling ourselves, how we are updating ourselves, how much are we aware that what is going around us, how the business is moving forward, how the regulatory landscape is changing, how the policies are changing. So there are a lot of things. If the companies have to make so much of disclosures related to climate risk, if the companies have to have so many of compliances, so it is logical that they will require professionals to help them in this process. So there has to be gap analysis has to be done for benchmarking, that what are their carbon emissions right now, where they want to move. Then narratives have to be prepared. Climate related measurements and targets have to be made. And this is not a field where any one professional can work, because we are talking about ESG. We are talking about a very, very multidisciplinary field. It is a very multidisciplinary field where we require all types of experts. Where we require all types of experts. It's a very multidisciplinary field. So they have to come together, work hand in hand, because here the climate related technicalities are involved, their financial impacts are involved. So we need a multidisciplinary field to take this forward. And CAs have an important role to play, because they have good knowledge of the financial impacts. They have the good knowledge. They are the masters of, how the finances of all the financial statements and everything. So CAs can always take a lead on these. And they can always help the companies to create climate related measurements and targets. Then on reporting on green bonds and climate impact investing, because if you are doing climate investing, so you have to also give the impact of that investing. They can also help to develop tools and methods for monitoring and reporting metrics. If first one has to develop our metrics, then one has to monitor it. That is one thing. Then apart from that, there is a climate scenario analysis which has to be done to address operational capital policy, stakeholder and people issues across business horizon. And I would request all of you to just go through few annual reports, like where they are doing scenario analysis, and it is very interesting to see those scenario analysis. And it is a scientific method which one can learn and understand. There is no there are few tools are there which one can use in for that purpose, do scenario analysis. Then control, then you have to value chain. Now this value chain is going to become a very good opportunity for in this ESG field. value chain is going to become a very good opportunity. So this value chain is going to become a very good opportunity, because if there is opportunity in both the sides. First, there's opportunity for value chain partners, like one can help them, and the other opportunity is for at the side of the corporates, because corporates will have to also, whatever first compliances are required from their value chain. First, they will have to engage with the value chain, make them understand what are the environmental requirements, because they cannot work with any supplier now if one who is not complying with those environmental requirements and all. So they will a lot of professional expertise is needed in that regard also. Then enhanced climate risk management. Say if the climate risk management is not up to that level where you can mitigate all your risks, so that climate related management will have to be enhanced. And one more thing I would like to add here is that there is some companies are not aware about the latest technologies or latest thing. So in a way, these are also a booming opportunity where you can tell them that how to move towards a low carbon emission economy. And building capacity. Now, training is one more important thing. That training the board and the executives on this climate risk, that is also one important thing for building capacity. Governance is very much important. You can see that governance is one of the pillars of TCFD framework. So if the board is not aware that what are the climate risk and opportunities and why they're important, so that is going to learn that this capacity building opportunities there. Then climate related parameters and ESG ratings. I've told you ESG rating is very important. ESG rating is in the public domain, and the funding agencies, the investors, they are looking at the ESG ratings of the companies. So these climate related parameters, they need improvements. If I just like to give an example, like a company is having a ESG score where it's in the environmental factors, it is not doing good, and it needs to improve its ESG rating, and for that specifically it needs to work on the environmental factors. Then in that case, it should work for that, and in that case, interventions will have to be taken, initiatives will have to be taken, a strategy has to be set that how in 1 year what initiatives to be taken and disclosed so that the ESG rating improves. And why do we want to improve a ESG rating? Because you want to get investments, because you want to have a lower cost of capital. So that's why climate related parameters and ESG rating have become more important, and for that professional help is needed. Now, GHG accounting, greenhouse gas accounting and assurance is an important topic, and professional expertise is needed. Most of you must be knowing that there is greenhouse gas protocol, which is the internationally accepted standard for greenhouse gas accounting. Scope 1, 2, and 3. So we should all have knowledge of that, and we can help the companies in GHG accounting. And there's assurance standard of IC 3410 assurance. So this assurance many companies are taking for the greenhouse gas accounting. Then TCFD compliance, many companies, they want to write in the report that they're TCFD compliant. So if we are, we have knowledge of the TCFD framework, and if we know how to implement it and how to report it, then that is one more professional opportunity. CDP, we have discussed earlier, CDP is Climate Disclosure Project, and their ratings are there, and similar other ratings are there. In fact, I have just missed that here. One is EcoVadis rating. EcoVadis rating is for suppliers. So now the supply chain thing, that's value chain thing, is becoming more important. So there is supply chain assessment also based on that. A rating is given. So there's EcoVadis rating also is there. So these are many new things which are coming up. New frameworks are coming up. New tools are coming up, and one has to, as a professional, learn those new skills, upskill themselves. And climate risk, like it is, it needs to be addressed with urgency. And as a professionals, like these areas are there, and we can always upskill ourselves and help our clients in all these areas. Next slide, please. So with this, we are coming to an end of this presentation. If any more questions are there, can take those questions. Are there any questions? Yes, we have got a question. How can CAs assist businesses navigating the complexities of carbon accounting and emissions reporting? See, as we've discussed, it is a process. Like it is a process that one has to first start on seeing, what is the current situation? Where are they? Okay, where are they? And based on that, like first the carbon, the first year, if you want to start with, then you have to first check what is their current, carbon emissions are there. An inventory, a carbon inventory will have to be made from there. Then based on that, a strategy will have to be developed. See, once you have checked your carbon emissions, then you know which areas have more carbon emissions, where where like which areas the carbon emissions need to be reduced, and further, then based on that you have to take steps, like whether you want to go for solar panels, like or you want to go for forestation, like, or you want to have rainwater harvesting. So these are the various areas. And but our job comes how to map that thing for after accounting, after seeing, then how, which strategy has to be taken, then how much carbon offset can be taken from that strategy, from that initiative of that company, and then monitoring the progress. And I will tell you, the most difficult task is data. If you are monitoring all these things, then the data is the most difficult task. If you go to your clients and talk to them, so they will say, okay, yes, X, Y, Z department is having the data, or this department is having the data. So data issues are there, centralized data is not there, comparability of data is not there, units are not same sometimes. So when you go to the field and do all these things, then you understand that what are the challenges. The data is not there, the machines which are giving you the figures are not properly doing it. So the things will have to be set from the base level. From the base level, everything will have to be set in a plan, and that can only be done if it should not be that, okay, we are preparing our sustainability report and now we want what we should do. No, if you have to report for your 31st March 2025, then you should start working now. The company should start working monthly wise, should have some targets every month. It should be monitored, and as CAs we can always assist them by laying down those strategy, the targets, and helping them to monitor them, to show. And it's sometimes it is an interdepartmental affair also. So putting things together becomes very difficult, and then reporting it to the right committee. Like sometimes there is a sustainability committee. So if you are a good expert, they give they allow you to be a special invitee on the sustainability committee, and you can with the operation department you can understand everything, and then report to the sustainability committee what are the challenges they are facing and how can you move forward on that. And then you have to help them to have a good disclosure also. Whatever initiatives they have taken, they should have good disclosures also of what initiatives. So I think that answers this question. Any more questions? So I think we are Shweta, do we have any more questions?
No, ma'am,
No,
there are
ma'am.
no further questions.
Yeah.
So I think we are through with the presentation.
Thank you, ma'am.
Yeah,
Thank you, ma'am,
so
for your
much.
Thank you, ma'am, for your insightful presentation on climate risk and regulatory landscape in India, understanding compliance requirements for businesses. Your expertise and practical knowledge have provided us with a clear understanding of the critical intersection between regulatory compliance, climate risk management, and sustainable business practices. We deeply appreciate your dedication to fostering professional growth and your significant contribution to navigating India's evolving regulatory environment. Your eloquence and clarity have made compliance issues both accessible and engaging, greatly enhancing our comprehension and preparedness in addressing climate risk and regulatory challenges effectively. Now, I would like to ask Utkarsh sir to present vote of thanks.
Good evening, everyone.
Good evening, sir.
Thank you, everyone. I want to extend my heartfelt thanks to everyone who contributed to the success of our today's webinar on climate risk and regulatory landscape in India, understanding compliance requirement for businesses. First and foremost, I extend my heartfelt thanks to our esteemed speaker, CA Jyoti Singh ma'am, for sharing her deep expertise and insights into the regulatory landscape and climate risks. Ma'am, your presentation has provided us with a thorough understanding of the current regulations and their implications for businesses. Your knowledge has significantly enhanced our ability to navigate these complexities and integrate effective climate risk management into our strategies. I also want to express my sincere gratitude to all the participants. I would also like to mention a special thank to the organizing team and the support staff for their exceptional planning and effort in ensuring today's webinar ran smoothly. Your behind the scenes work was crucial in developing a well-organized and impactful event. I would also like to personally acknowledge our chairperson, CA Shri Priya Ji, and our vice chairman, CA Dr. Anuj Goyal sir, for their visionary leadership in organizing this essential webinar. Sir, your dedication to advancing our understanding of climate risk and regulatory compliance is truly commendable. As we conclude, let us take forward the key takeaways from today's discussion and apply each of them to enhance our climate risk management practices. Together, we can make significant strides towards a more sustainable future. Thank you. Thank you once again for a wonderful session, for a wonderful webinar, and hope you all have a wonderful day. Thank you.
Thank you, sir. Thank you for your wonderful words. And now, to revisit today's discussion or catch up on previous sessions, we are encouraging you to visit ICI TV channel of SRSB. There, you will find a wealth of knowledge and insights from a past session. Stay informed and continue your journey towards sustainability excellence by exploring our content on ICI TV. Stay connected and take care. Thank you.
Thank you.
Thank you, sir. Thank you, ma'am. Thank you for joining. You may leave. Technical support? Yes, sir.